I can see the future. Can you see the future? Would you like to be able to see the future? Now, if you go back and see my Dogecoin video I did a few weeks back, I said, do not buy Dogecoin. Avoid the Dogecoin bullet. Why was I saying that? It was because when it comes to Elliott Wave and Fibonacci, it was hitting a wave 5 high, and I said it's likely to do a big correction. Avoid getting caught into that trap. Most people get caught into that trap. And today's video, I'm going to cover how now we've actually seen it unfold almost perfectly. And now we're going to see, can we buy Dogecoin? Is there a great opportunity from a technical standpoint to buy Dogecoin and make some amazing profits? I'm on the side of I think so, and I'm going to show you exactly how. And if you like today's video, hit the like button, subscribe, hit the bell notification. If you don't know who I am by now, my name is Jagir. I am the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for 15 years and now I apply that knowledge to cryptocurrency, and it applies so well because it's such an infant market. And I use a lot of the stuff that I was featured in, because I was featured in this book in 2008 called High Probability Trading Strategies. Phenomenal stuff when it comes to Elliott Wave and Fibonacci. Brilliant. And I apply it to the crypto market and it applies so well. I got a mathematical mind because I used to be a math teacher, and I say it used to be, now I just do this stuff for you. So let's have a look and dive straight in. And by the way, if you haven't taken my crypto trading course yet, which covers this stuff in a lot more depth, it's free. Send the link below in the description, take it, it's free. And when you watch my videos, it'll just make more sense because I cover Elliott Wave and Fibonacci a lot because it's the main thing that I use for technical analysis. So I think it was, when was it? It was May 7th, May 8th, I did a video and Dogecoin was at this price live. I've taken the data back so we can just kind of see how it unfolded. And I said, please do not buy Dogecoin right now. Why? Because the probability is not in your favor. What it was looking like was the market was doing a 1, 2, 3, 4, 5, and it tends to have a wave 5 high. And I did these projections, one of which was this particular projection, which is the typical maximum for a wave 5 high. And I was like, man, when it hits that, it's not a good time to be buying. Why? Because the upside potential is limited. We want to, know this concept, lodge this into your mind. The trend is your friend. Ride it until its end, until it reaches its bend. Now, reaching its bend means when you see these high probability end of wave 5 price targets, which is what I teach. I've got some advanced courses as well, which I teach it, but I break it down to layman's terms. When you see this, that's when you should be looking to take profits. Ideally, you want to be looking to buying opportunities down here. So let's just see how the market unfolded. So this is what I say. Would you like to be able to see the future? Fibonacci and Elliott Wave theory technical analysis are leading indicators. Moving averages, support, resistance, other indicators, which I actually use. I use a stochastic RSI. This is this thing at the bottom, but it's still a lagging indicator. It takes history and tries to project it forward. We just want to do pure technicals projecting forward. So what we've seen here, I'm going to just unfold the data to today's date, is literally 1 or 2, 3 days after I did the video. And you can go back and look at the video. I said, do not buy. Look, do what you want to do. But I said, look, the probability is not in our favor. Investing and trading is all about probabilities. You want to get the edge in your favor and then consistently apply that edge to the market rather than FOMOing in. FOMO standing for fear of missing out. And this is panic buying. This is textbook panic buying. That's what wave 5s tend to be, panic buying. And we're going to see that again probably towards the end of this bull run if it unfolds as anticipated. So the next day we had this big down bar as low as 40 cents and the high over here was around 80 cents. So and that's what we said. We said it's going to likely do 3 waves to the downside. And what then happened was we had this almost just textbook. And then there was a move up. So then we're looking at this A, B. And what you can do in advance, which is so powerful, and this is exactly what I did, is you can do a retracement. Now that this, let's just say this is live data and it's going day by day, you can actually do a price projection. And a typical retracement, the maximum typical for any market, especially cryptocurrency, is this 78.6% retracement of taking it from this low to this high, which we're just measuring this wave 1 price and projecting a retracement of 78.6. And I'm just going to drag it across so it's really clean for you to see. Because now at this stage of the market, we've had this big move down, and this move down is bigger than this move, is bigger than this move. So we can be quite confident now that the trend has turned. The trend is your friend, right until its end, until it reaches its bend. We've reached the bend. Now the trend is down for when we can anticipate for the next few weeks. Then what happened was the market just unfolded just perfectly. Look at this. And it just got so close to that 78.6% retracement. And then what we're looking at is where the market is today. we've had the sideways move, and this is where we are today. How beautiful is that? Now I've also labeled this, let me just do it this way. It's a bit of a shortcut. This looks like a wave 2 low. And I put a question mark there because, why do I put a question mark? Because look, we don't know what's going to happen next. You know, let me give you the top tip. Get rid of the illusion of control. We do not have control over the markets. The markets are going to do what the markets are going to do. What we do have control over is the technical analysis and getting the probability in our favor and doing proper money management or risk management. So ultimately, the ultimate confirmation is going to be if the market goes above this wave 1 high, then this will confirm, that will be the proper confirmation that this is a wave 2 low. But is there buying opportunities? Like when I look at this, I go, all right, we've had this wave C of a wave 2 low. And it's at this price level, there's pattern, there's also some time analysis, but they've also got this momentum went bullish on this phase here. So the other day, I looked at the market a couple of days before here, around here, and I was like, oh, there might be a buying opportunity here, because if this unfolds, what tends to happen is you tend to get these microwaves of a 1, 2, and then a lesser degree 1, 2, and then a lesser degree 1, 2, and then the market tends to explode. So let's just see what I did as a buying opportunity. So we're going to jump into a 4-hour chart. So now it's zoomed in. So this is the same movement on the way down, A, B, C. The market's kind of doing this consolidation, it's getting tighter and tighter. But in terms of Elliott waves, if we just zoom in, what I saw, if I can make this really clear for you, hopefully I can. If I can even just get rid of, let me just get rid of this for a second. I'll even get rid of this as well. All right, this is just, I make notes on my charts when I'm managing my positions. I make notes directly on the chart, so it's very easy for me to manage. So I can spend 15 minutes a day and go click, click, move my stop losses, X, Y, Z. But what I want to show you is how I entered this. What I saw is there was this movement to the upside and then a movement down. And on a micro level, on a lesser degree, because Elliott waves unfold, you see the macro picture, then the intermediate time frame, and then like the micro time frame. Is can we get a tight position with a tight stop loss? So I'm just going to draw this for you. I'm going to do it in orange so it's really clear. What I saw is what looks like, here we go here, a potential wave 1 and then potentially a wave 2. Now if this is true, again, you notice I use the word if, probable, maybe, highly probable. It's never a certainty, and that's the business of trading. So I put in a buy order on this swing high, this wave 1 high. Why? Because if I'll take that out, this low shouldn't get taken out, and that's where our initial stop loss, that's where my initial stop loss was. And I took a long position. The market moved up quite nicely. I tend to exit my first unit, which I call insurance, quite fast. And I teach this in my course. If you haven't taken my crypto trading masterclass, take it, it's free. And I cover some of these principles in terms of risk management, capital preservation, because it's so important. Because you can buy the perfect project at the perfect time, but you only make money when you sell. And most people are not good at selling or exiting their insurance policy, which I call the first position, and then riding that wave for that second position. So what I've done is I've exited my first unit, which I call insurance, on this swing low. The momentum went up, down, up, and on this bear, I said on the next 1 bar low, I want to exit. So I actually just got exited within the last hour, which is great. I made like a good chunk of profit. So why would I do that? Why would I do that? Because this is wisdom. This is wisdom and the application of trading. Because most people don't get this. They just focus on buying and making money, which makes logical sense, but it doesn't make practical sense when it comes to the emotions of trading. What you want to assume always is that you're wrong. So even though it looks like a wave 1, a wave 2, and a potential beginning of a wave 3 on a lesser degree, and it might unfold to higher highs, and I'll show you that in a bigger picture, what you want to assume is that the market's going to do this. That's what you want to assume. Why? Because Warren Buffett said it nicely. Rule number 1 when it comes to investing, never lose money. Rule number 2 is never forget rule number 1, never lose money. And in practical terms, that just means capital preservation. Preserve that capital, and the profits will take care of itself. Your job is to be consistent as a trader and as an investor, to get the edge in your favor and then ride those waves. Sometimes it will unfold perfectly and you make some amazing profits. Sometimes it will do the minimum amount and then reverse. That's where you'll take your insurance policy, break even, take a small profit. And other times it just won't even do anything that you expect and just stop you out and you take a small loss. But over the year and 5 years to come, you can make some really, really good returns. So if it does do that, that's the minimum that we can lose. That represents 3%. But I've already exited my insurance policy. So now I'm risk-free in this trade. It literally just got triggered. And the market will probably go on to make higher highs. That's all well and good because that's what we want to do. Because now I can look at another position that I can take that's got high probability. Last thing I want to cover with you today is, let's jump back to the daily chart. Go, okay, Jagir, that's all well and good. Let's just get rid of some of these lines so we can keep the chart nice and clean. I will even get rid of these lines. I use TradingView, by the way, if you're wondering what software this is. And so the chart's pretty clean now. What am I anticipating? I don't even like having this here. I'm going to just move that from the daily chart. And this as well. Because these are all lesser degree. It's not relevant on the daily and weekly charts. All right, so now we've got a nice clean chart. So what am I anticipating? Well, if this is a wave 2 low, well, if he can count to 5, you know, wave 1, wave 2, what comes next is wave 3. What does wave 3 typically do most often? Well, it exceeds the wave 1 high. So I'm just going to draw a nice clean arrow. It makes a new high. What's the typical, most common minimum wave 3 projection? Is if we measure this wave 1 low to this wave 1 high, project it from the wave 2 low, and the number that we want is 1.618. You go, well, yeah, I can't see the line. That's because it's off the chart, literally off the chart, right? You can see there's one that I've drawn earlier. So what is the number? It is around $1.37, so $1.40. So we can be, what I'm holding for my second position, and ideally that I want to ride the second position of my Dogecoin position. And by the way, I don't care about Dogecoin. In a sense, is it a meme coin? Is it got great utility? Is it all a joke when Elon Musk just kind of rides it? I even ignore the news. I go from a total technical standpoint. We can go, it doesn't matter if it's Bitcoin, Dogecoin, Ethereum, Polkadot, whatever. We just go, let's just look at the psychology of the market, because ultimately when there's more buyers than sellers, price moves up. When there's more sellers than buyers, price moves down. And when the technicals are giving us a great opportunity, we want to take those opportunities every single time consistently and not get caught up in the news, so we can just be a consistent investor and trader. So what would this look like? I'm just going to show you one more thing, because most people don't get this. I was trying to get this across to my students. I'm trying to figure out a cleaner way of getting this lesson across. My risk was roughly around this distance, and the potential reward is here. Now, is it going to unfold like this? I don't know. I can't read the future. I can project with high probability what's likely to occur just based on Elliott Wave and Fibonacci, time and price and momentum. But when we're looking at this, if you know how to use a stop loss, if you don't take my, I don't think I can't cover it in my crypto masterclass, but I cover it in my advanced courses. But the crypto masterclass covers the concept, the real concept of how this is a potential 20x on your second position, which is 2,000%. And if you have managed to hold the wave 3 and it does reach this point, that's going to be really, really healthy profits. So there you have it. Dogecoin, is it going to the moon? I don't know, but it's highly probable. It looks like it's making a nice wave 2 low if it unfolds. Always, please, always assume that you're wrong. Yes, I know it's counterintuitive. I'm an optimistic guy, but best practice, the best of the best, the world's elite, who are only right 40 to 50% of the time, by the way, just so you know, in terms of expectations, is assume you're wrong. So then you exit your insurance policy, which is around half of your position. So you want to be risk-free relatively early, within the first 1 to 2, maybe 3 days of your trade. And then you can comfortably hold the second position 2 weeks, 3 weeks, 5 weeks, 8 weeks, 3 months, 6 months, whatever the market unfolds. And then we just make logical decisions based on the data and the information that we get. Woo! That was good. Dogecoin, can you believe it? You know, few weeks ago, I was like, don't buy Dogecoin. Now I'm like, consider buying Dogecoin. You know, not financial advice, but you know how to do your due diligence. Take my masterclass. It's free. It's crypto trading masterclass, how to fund your retirement. Like, subscribe, hit the bell notification. I want to bring these videos. To be honest, one of the reasons I haven't been doing more recent videos is because I've been working so hard on the new course. We've got a new crypto trading course, but the crypto masterclass, the crypto trading masterclass is like the real top three secrets of the course, which I want to get across to you. So if you see my videos, you'll kind of get the jargon that I'm talking about. So we're on the same page. All right. I will see you very soon.